Good morning, Squawk traders. This is Mike Kuda coming to you live from Chicago. Hopefully everybody had a restful and enjoyable evening. Coming into today, like each and every day, we want to first take a quick look here at the economic reports that will be due out today. I do want to remind you guys, as a professional trader, we like to get into positions prior to a report and then use the report to fuel our move. I want to remind you that 90% of all volume that transpires after an economic report are people covering positions, be it long, short, profit, or loss. They're looking for that exit opportunity to maximize the profit and minimize the loss off of that position due to the economic results of the reports. Today, guys, if you take a quick look here, today is Wednesday the 19th. We've already gone through the NBA purchase applications at 6 o'clock this morning. We'll go over those in a few minutes. Today at 7:30, we do have the housing starts and building permits. Once we get through there, guys, you get the 8 o'clock NYMEX crude oil pit contract open, which usually gives us a directional move. We then get into the 8:30 day session open. Once we get through there, we do have a big oil and gas stocks report will be coming out at 9:30. And then to clear out the day, we get a 7-year note auction at noon during the lunchtime rotation. So remember, guys, we are counter trend traders. We're going to be looking for the market to hit support or resistance and turn. This usually occurs about 70% of the time. 20% of the time you get a breakout, and then 10% of the time that breakout turns into a trend and the market continues in that direction. So we're looking for high probability counter trend moves off of support or resistance. Also, traders, I do want to remind you that we have the gap trade that we watch. On the large S&P, we take the 315 close from the previous day to today's 8:30 open. If the gap is 6 or more handles in one direction or the other, we consider that a runaway. Market should continue in that direction. If it is less than 6 full points, we consider that a filling gap. Market should retrace and touch previous day's close. So once again, 6 or more is a runaway, less than 6 is a filling. Also, traders, we want to watch the Globex activity. Once again, Globex highs will act as a resistance level. Globex lows will act as a support level. And we always look for the market to try to test both ends of that Globex range before they make their directional move for the day. So what we're looking for, like I said, counter trend moves off support or resistance. We're looking for multiple levels coming in together to give us a higher probability that level will hold. And to top it off, guys, like I've always told traders, even if you don't like the trades we take, find a way to incorporate those floor levels that I give you in. Once again, if your levels and my levels match up, it's going to make for a higher probability that area should hold. So what we do is we take the previous day's closes on the S&P, NASDAQ, 30-year long bond, Dow futures, euro currency, and crude. We then use our proprietary formula to calculate out support levels below, resistance levels above. Now remember, they do not include the Globex action. So once we go over on the broadcast here, those levels, you take the current traded price, factor it in. If you're above a resistance level by our confirmation, that's a breakout. Market should continue. Old resistance should become new support, and vice versa. If the market is selling off and we're below a support level by the confirmation, that means that old support should become new resistance. Look for the market to continue in that direction. I do want to remind you on the S&Ps, we use a 1.5 confirmation. So if the market's trading at 1320 and we rally up here to resistance at 1323, well, if the level holds, that's good. If they break through it and trade 2450, that would be the 1.5 confirmation. It's considered a breakout, and we look for the market to continue. That way then the 1423 would become support. Same thing on the downside. NASDAQ, we use 2 handles. On the 30-year long bond, we use 5 points. And on the Dow futures, we use 15 ticks. One other thing that you want to watch here, guys, is we do watch our 10-to-1 ratio. Every 10 ticks in the Dow should equate out to 1 full point or 1 handle on the mini S&P. So if you come into today and you see that the Dow is up 50 points, S&P should be up 5 handles. Now, what happens here is 8 out of 10 times, Dow should lead directional movement. There is that 20% chance that the NASDAQ or the S&P could run further and faster and drag the Dow with it. But whenever you get the two to disconnect from that 10-to-1 ratio, look for them 80% of the time to draw back in line with the Dow. And there are those 20% times where that, once again, NASDAQ, as we've seen in the past, runs and doesn't turn back, or the S&P. And over the last 2 days here, guys, coming into today, Wednesday, the 19th, we have seen the S&P run further and faster and continue to rally off of, once again, the fiscal cliff getting closer and closer to a resolution. So what I'm going to do now, traders, is go over the proprietary levels
Yeah,
and get you ready for the day.